Hey everyone, Matt Sines here. Today I want to talk to you about documentation and the importance of documentation when it comes to obtaining mortgage financing. See, documentation is absolutely key when it comes to loan approval. You know, the implications of a mortgage loan are hundreds of thousands of dollars, and it could leave someone homeless. So the stakes are high. We want to make sure that we get it right. Unfortunately, we just can't take what you tell us at face value. It needs to be verified. If you recall, the early 2000s, undocumented loans was the major cause of the Great Recession, which impacted the entire globe. So it's absolutely key to have good documentation when it comes to mortgage financing. Typical documentation will vary by individual as well as loan program, but typically includes 30 days worth of pay stubs, 60 days worth of bank statements, 2 years of W-2s or tax returns, a credit report, and other additional information pertaining to your situation, as previously noted. For instance, if you're self-employed, you might not have pay stubs, and we might need to get 2 years of tax returns to show your consistent income. Now, general documentation standards includes it must be a complete document. That means that if your bank statement has 6 pages, we need all 6 pages, even if one of the pages is blank or a disclaimer. It can't be redacted or edited, marked up in any way. That's typically a red flag when it comes to underwriting. And also, it has to be legible. It has to be in a format that we're able to read easily. When it comes to asset statements, such as checking savings accounts, we do need a little bit more information. It's got to include your name, the institution's name, transaction history, running balance, etc. I cannot tell you how many times I'll get a statement that doesn't have the account holder's name on it, and unfortunately I can't attribute those assets if I don't know whose they are. Also, typically speaking, if it's sent electronically, it will need to be in a PDF format. But that, is subject to change. Now, it's also common to have the lender request documentation throughout the whole process. You might send some documentation at pre-approval, you might send some updated documentation when you go under contract, and then again when the underwriter reviews the file. This is common, and it's because things change over time. There are time limits on the documentation provided, and also documentation simply might not be available at that point in time. For instance, if you put a deposit down on a contract and the lender needs to verify that deposit, that might not be available until it comes out of your bank account. I know documentation can seem tedious, can seem annoying, can be a little bit challenging at some points, but make sure you always communicate with your lender and let them know what you're able to provide and what you feel comfortable with providing. It makes a world of difference and allows the process to go much more smoothly. In some cases, unfortunately, it's non-negotiable. The lender needs what the lender needs, but definitely communicate with them and get them documentation that you feel comfortable with in providing as quickly as possible. For more information about this topic and how it pertains to your situation, please feel free to reach out.